61%. That's how much of Berkshire Hathaway's $330 billion portfolio is now sitting in just 5 stocks. This just happened, and most investors don't realize what it means yet. Here's what's really going on, and what you should be thinking about right now. Because this isn't the Berkshire you grew up watching. Something fundamental has shifted, and if you're not paying attention, you're going to miss it. Greg Abel is officially running the show. Buffett's handpicked successor has made his positioning crystal clear. $330 billion. That's the total market value of Berkshire's equity portfolio right now. And 61% of it, roughly $201 billion, is concentrated in just 5 positions. Let that sink in. This isn't a diversified fund. This is a conviction bet. Here's what those 5 positions are. Apple still sits at the top, approximately $174 billion at peak. Though trimmed, it remains the anchor. American Express, Bank of America, Coca-Cola, and Chevron round out the core 5. But here's the number that should stop you cold. Over 28% of the entire portfolio, nearly $93 billion, is concentrated in just 2 names with direct AI exposure. Apple and its ecosystem, plus a second major technology position, are now the gravitational center of what was once the world's most celebrated diversified value portfolio. This is not your grandfather's Berkshire. While retail investors were selling tech on macro fears in Q3 and Q4 2024, institutional smart money, including Berkshire's own positioning, was doubling down on quality concentration. The message from the top is unmistakable. When you have conviction, you concentrate. But here's what nobody is saying about this yet. The mainstream narrative frames this as Abel inheriting Buffett's portfolio. Wrong. This level of concentration, 61% in 5 names, is a deliberate philosophical statement. Abel isn't managing legacy. He's signaling dominance. Think about what it means when the most scrutinized value investing firm on the planet bets this heavily on AI-adjacent technology. It means the value investing thesis and the AI growth thesis have officially merged. That's the trade of the decade. And Berkshire just put $93 billion behind it. 3 things to consider right now. Not advice, just perspective. First, audit your own concentration. If Berkshire's 61% in 5 stocks feels bold to you, what does your own portfolio look like? Unexamined concentration is the risk nobody talks about. Second, look at the overlap. If you hold index funds, you already own these 5 names. Heavily weighted, you may be more concentrated in Berkshire's top picks than you think. Third, watch what Abel sells next. The exits will tell you more than the holdings. When a position gets trimmed at this scale, the signal is worth billions. 61% concentration from the world's most famous value investor. Is Abel making the boldest call in Berkshire's 58-year history? Or is this the beginning of the end of true diversification as a strategy? Drop your take below. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.